and welcome to the weekly wrap video. Just a couple of events to catch you up on from the past 5 trading sessions. All the focus once more on the central banks from across Europe and the US. First of all, on Thursday we saw the Bank of England unleash a surprise statement alongside their unchanged monetary policy decision, wherein they did say that the domestic factors in the UK do not warrant the market's perception of a rate rise in the UK in the near to medium term. As such, that has been perceived as dovish as we head in towards August, where the Bank of England are expected to unveil their assessment of possible outlines of forward guidance at the central bank under the new governor, Mark Carney. As such, we have seen weakness in the sterling currency throughout this week, with the cable currency pair losing as much as 350 pips as we head in towards Friday's close. And elsewhere, the ECB also adopting a similar measure, with Draghi outlining his first forward guidance, saying they do expect rates to stay at their current levels or even lower for an extended period of time. So trying to reassure markets that they're not anywhere near exiting their loose monetary policy anytime soon. As such, the euro against the dollar has also fallen to the tune of around 200 pips, well below that 129 level for euro dollar. We also saw equity markets rally in the wake of that decision. They are eking back some of their gains on Friday, but still holding on to some green as we head in towards the close of the week. And then finally on Friday we saw that key change in on-farm payrolls report, with the headline beating expectations at 195,000 and the previous also seeing an upward revision to actually that same figure. But the unemployment rate has come in above expected and unchanged at 7.6% as more entrants to the labour market push their participation rate ever so slightly higher. So this is seen as pushing the Fed closer towards tapering their QE programme. As such, we've seen a broad-based bout of dollar strength as well as downside moves in the equity markets as they prepare for that withdrawal of liquidity from the Federal Markets Open Committee. So over in the Treasury markets, the US 10-year yield has ramped higher and higher as Treasuries come under selling pressure, with the 10-year yield rising above 2.7% for the first time in over 2 years. So that's likely to take precedence as we head through into next week, also with further digestion of the economic specifics of the Fed's tapering QE. But looking ahead into next week, we see Alcoa kick off earnings season for the next quarter, so that's likely to take dominance of the US equity markets, but we'll cover that in full next week, and we'll bring you all those key releases as soon as it hits the wires, as well as any other relevant commentary to your trading. But in the meantime, that's all from me. I hope you have a fantastic week, and I hope you have an even better weekend.